What's up, and good morning, guys. I was supposed to post this video last week, but I got caught up in some family things. But anyways, this is going to be a short and sweet video, just getting to the point, just talking about the structures that I trade regularly and how I execute them and how I don't just blindly enter things. I like to use other forms of technical analysis for some more confluence. So we have four types of structures that I look for. You will have rally, base, rally, demand zones, which form in trending up markets. So you get a move out of the level, you get a rally, basing, rally. The goal is to not chase the move. I actually wait for the pullback into the origin, which is the basing area. So the entry won't be on the breakout. I'll actually wait for a pullback into the level, targeting the previous high that was formed. So it's great because you have your defined entry and risk. So I take an entry over here with your stop below here. So let's say rally, base rally level. So again, I'm not chasing the move. I would wait for the retracement back into the imbalance. Rally, base, rally. Up market or forms in trending up markets. On the flip side, we have our drop base drop. Market's trending, we drop, we pause, drop again. So again, I'm not going to chase the flush. I'm going to actually wait for the bounce back into the imbalance. That happens preferably sooner rather than later. And I would take my entry in the level, looking for a test and break of the prior move down, assuming trend continues. So again, the entry would be back into the basing of the body candles which formed. This is drop, base, drop. These structures form in obviously downtrending markets. These are far more reliable than your rally, base, drop, base, rally levels, but these do form reversals, and we call them rally, base, drop. So this is what happens when a market trends for a while, bases or the distribution, and we drop. So this is a reversal structure which forms after a market has been trending after a long time, usually marked by a bullish engulf candle near the top. So the idea here is the market is topped, assuming that on the retest of this rally base drop supply zone, the market fails to make a higher high. So therefore, we get rejection out of this rally base drop supply zone for a move down for either a wave 3 or wave C down. So rally base drop. Rally base drop. And again, this forms after a trending market has been moving in an up direction for quite some time. You get this distribution pattern, fade, pull back into the level, drop. These are far more reliable in a market that is extended, obviously, and that has been trending in the same direction for quite some time, and a corrective move is needed. Now, let me scroll up here. Now we have our drop base rally. Market's been trending down for a while. Drop, base, pop, breaking a previous minor high. The idea is the market has potentially found a new low because buyers are starting to step in at discount, forming this drop, base, rally, demand zone. Right? Structure does, you have a change of character. A previous high is broken. So the idea is on a retracement, you want to look to buy where the smart money is at discount in this drop, base, rally, demand zone that developed after a market was trending down after a while. The idea is we have a very sweet entry here because we would look to buy a discount. What stops below the lows, because the assumption is if the market does make a higher low, we have found a bottom and the market can resume up. So these are just the four structures I look for. And what I do and how I trade them is, we look for the basing candles. So what is going to happen is whenever I implement this in real time, I'm going to use two things. I'm going to use higher time frames, and I'm going to use the smaller time frame for entry. So I like to use the 4-hour, 2-hour chart. So rule of thumb for me is step one, ID levels on HTFs or higher time frames, 4-hour, 2-hour. Step two, entry is on the lower time frames. So I like to use the 15-minute for entry, sometimes 5-minute. And the idea is that higher time frames take more time to form over time. Therefore, there's more accumulation or distribution that is needed that did form that level. So therefore, it could take some more time. So what happens is you obviously want to dive into the smaller time frames to try to nail that precise entry. Step three is I like to pair a momentum oscillator, RSI of some sort. For me, I like to use the simple stochastics. My inputs are 1553 for those asking. So these are my criteria that I look for. Oh, and also step four is you want step four is strong zone equal one that was retraced into sooner rather than later. Reason being is because banks and institutions have a mindset like us, meaning that they want their orders filled sooner rather than later. I mean, why is, let's say that we, like identify some sort of level, from back here. This is a rally-based rally. So sure, this is a valid level. Sure, it could bounce. But the idea is that why would the banks and institutions who were placing buy orders back in November of 2020 around 292, 290 QQQ, why are they going to wait this long to fill their orders? They're not going to. So sure, there may be outstanding buy orders here that have not filled and thus could bounce the market. But your stronger zones are going to be ones that develop in the short term and they are retraced into fast. So, here was just a quick example of a rally-based drop supply zone, right? Notice that the market was trending up here for a while, trend, and then we finally formed this rally-based drop supply zone. And that happened right at this doji candle, right? So you can see that at the time, we were trending for a while. We were overbought on the stochastics. We did form a valid supply zone right here. Why? Because we printed a daily supply zone right here. So I draw from the body of the base and candles. So at the time, obviously, here was our level that formed. Right, so we form a rally-based drop. Notice how fast price moves away from this imbalance, right? Boom, and then you get the bull trap, which happens on this huge green candle. And think about it, retail traders are buying after a rally in price into a level of supply where they are selling into. We had some more confluence on this because look at the stochastics right here. Super overbought. So when you start to see this structure print and very overbought levels, you don't want to be long there. So let's say that our stochastics were in the power zone down here or even oversold. And this structure prints, it's not going to hold as much significance because, the market was oversold. But in this case, we were very overbought, printed this supply zone, and we dumped. Right up there. So, that was a daily supply zone. For my day trading, at least, I like to use the 4-hour, 2-hour charts to identify levels. And then smaller time frame, obviously, for entry. So here's a couple of short trades that we've taken. This was a rally-based drop supply zone right here. Notice how price rallied, based, and just dropped. Right, so the origin of the imbalance would be right here. I draw my levels. Same thing as I showed you guys on the last chart. Right? We get our 4-hour view here. So think about it. Rally rally, base, drop. This supply zone took out this previous low. So this low that was at 342.50, this supply took out that low because notice that we formed a new low right there. So again, once we do get that change of character, change of structure, we know, hey, you know what, trend could be shifting because we had broken this low. So we get the supply zone that forms here, valid supply zone, because it did take out this supply zone. 346 supply took out the previous minor low of 342.50. So we don't chase the move down. We actually patiently wait for the retest into the origin of the supply zone. And notice that we tagged it. Stochastics were very overbought up here, and we just massively dumped. Going back into the smaller time frames, whenever the trade could be executed, what you can do is, so higher time frame level here, this supply zone took out this low. So let me just annotate this. 346 supply took out this previous low, change of structure. So we get this supply zone that formed. So this is the 4-hour supply I was just showing you guys. Took out this low because we made a low at 340, and then you get this bear trap. So the idea is that price moved away too fast from the supply zone for smart money to fill their orders. So look what happened the next trading day, right? We push back into supply. Look at our 15 minutes. So 4-hour was on sell. 15-minute chart, which is our entry lower time frame, was also on sell. So think about it. I'm not going to initiate a short trade down here, right? So if my entry is on the 15-minute, I'm going to wait for these extremes to tag. So I'm not going to enter when the stochastics are only trading around 60. I'm going to wait for us to get into supply, and I'm going to also wait for the stochastics to show me things are curling down. So on our entry, we would have had just an extremely, like a near perfect entry, timing the lower time frames with the higher time frames in supply. And again, this level traded the next day. So again, what I talk about with time is a stronger balance will be retraced into sooner rather than later. It took only one trading session for this supply imbalance to fill. It was one session, and then it was valid because it took out a previous low. And some people would look and say, hey, Chris, isn't this supply right here drop, base, rally? Isn't this demand right here drop, base, rally? This level? Well, think about what I just told you guys about the criteria. Did this demand zone take out a previous high? So in order for this demand zone drawn correctly, so this is drawn correctly, the easiest part is identifying levels. So I'm going to show you guys some failed instances. Okay, so there's a demand zone, right, that was drawn. Here's another demand zone that is drawn correctly. But let's see what we're talking about in terms of whether it does meet the criteria for a valid level. So let's go back to this zone here. So from this low, so when this demand zone formed, the most recent high is going to be this high, 348. Okay, so we need to ask ourselves, hey, did this particular demand zone, which is demand because it did print the correct engulfing structure, did this demand zone take out a previous high? And the answer is no, it did not. The high it got up to was 347.40. It did not break this high. So therefore, this is not a valid level of demand. We want to see levels take out structure. So this is why this zone was void, because look at this, price blew right through it, right? So buyers were not in control here. We did not take out a previous high, and that's the same scenario for this demand zone right here. This demand zone, had it broken this 348.21 pivot high, it would be a valid demand zone. But again, it didn't. It failed. It was a lower high. Sellers are in control. Trend is intact. Therefore, inside a downtrend, demand gets violated, and supply gets respected, which is exactly what we saw in this case. So again, failed to take the high. This is not a valid level of demand, and neither is this. And I've just showed you guys two scenarios where the demand zones were drawn properly, but structure did not prove its case, and trend remained intact. That's why you need to look at context and just really kind of know where you're going, with the market. You want to know general trend and whatnot. So here is another example right here. Okay, so this was another 30-minute supply zone that I alerted to my subscribers last week. Supply and demand zones work awesome on the 30-minute chart too as well, by the way. But you can see the structure right there, right? Rally, base, drop. And also look at what happened. This supply zone was in fact able to take out this low. So this level of supply was indeed valid because we had price retrace back into it fast. It did indeed take out the previous low here of 308, making a new low.
Come on, man, get up. I'm up, man. I'm up.
So therefore, what we're saying is that the entry would be on the retest of the supply zone here. And it was valid because think about it. This 315 high was never taken out, right? So we can see that this supply zone on the retest took it out. We made a lower low, and it was a beautiful fade. Here's another example of a failed level of demand that failed because it did not meet the criteria for the correct structure. So here is a valid 30-minute supply zone, right? We get the demand zone formed. So we need to ask yourself, did this structure take out a previous high in order for there to be a change of structure? So we mark out our previous high, and you can see here that this high of, what is this, 316 was not taken out. So you can see that it, the market just blows right through it. So, we need to keep in mind context, and we need to be able to identify trend. Okay, so here is a perfect example of a drop, base, rally, demand zone, drop, base, rally, demand zone. And it worked. Want to know why? Structure printed this particular level of demand, tack to the tick almost. This demand zone had in fact taken out a previous high of 321. So you can see here that you get the traders buying the breakout. So this is all liquidity. Trader buys the breakouts upon 321 break. So think about it for a second. Traders are buying after a rally in price because of this breakout. So your breakout traders got smoked here. Because look at what happened, guys. We pulled back for liquidity, so they were basically their stop hunt. So retail traders are buying at their rallying price because of trying to play this breakout. And look at what happens, guys. Price pulled back right into the origin of the valid imbalance because this imbalance took out 321 high. So it did take out a previous high. And you get this retest back into demand. And it just explodes and it squeezes them, because they probably switched from short after buying here. So again, we really want to see levels, valid levels, take out previous highs or lows for there to be a change of structure. It is so important to keep this in mind. And I love to use the stochastics tool for more confluence. So let's go back to that last trade here. You can see that when this level formed, look at how oversold the stochastics were. So you just get a lot of confluence when you just use these tools all together. And this works in all time frames. So it's really cool just to see the before and afters, just to see how the market moves and whatnot. So again, this is another level right here when I talk about how institutions and banks, they want to see their orders filled as soon as possible. So they are very impatient, right? So here is a perfect example. Look at this. Rally base drop supply zone. So the imbalance prints, price retraces so fast back into the level right here, and we dump. So that was another great sign of a short opportunity here, was because look at how fast price moves away from the origin. Look at how fast price moved away from here. We get this rally base vicious drop. Price faded literally. We faded 10 points. 10 points in a 2-hour candle. Boom. Fade. Tags this little drop base rally. Demand zone for the bear or for the bull trap for the relief bounce. We bounce out of here. Look at this. We tag supply perfectly. And again, the level was retraced into very fast, which is what we want to see. Our stochastics indicator was indeed overbought, right? Overbought, fresh tag of supply, and boom, huge break, huge breakdown. So those are just a few of the examples that I look for and some criteria that I do look for before I look for entering a trade. You know, I like a lot of things to align. I like how the stars to align. I need to see price retrace back into the level sooner rather than later, ideally. I need to see our stochastics indicator as well. I need to see the lower time frames agree with the higher time frame zone. And, you know, again, the easiest part of trading supply and demand is mapping out your levels and your zones. The hardest part is actually implementing it into your trading. So I hope this helps a lot, guys. I'll do more of these in the future, but these are just some things you should be aware of, and I think would help you tremendously in your own daily trading.